Hey everybody, it's Paul here. Yesterday, in my 5 minute quick review of an ETF, we discussed YTSL from Purpose. It's a Canadian ETF that, of course, holds Tesla as the underlying stock. Today, it's up 2.8%, which for me is almost another $1,000, putting my position up almost $11,000 capital gain, unrealized, of course. Today, I decided instead of going for my third largest position, because I did my first and second largest, I'm going to go for a smaller position, but one that's also from Purpose Investment. So we're going to kind of stick with Purpose as a theme. So today, we're going to talk about ETH, which is one of their Ethereum ETFs. All right, guys, so here's Purpose Ether Yield ETF. The purpose of this fund, the world's first yield-focused Ether ETF, offering investors regulated way to earn additional income from Ether exposure. So the benefits of this is no wallet required. So you can gain exposure to Ether without needing a digital wallet or managing private keys. You can earn income by harvesting volatility premiums in a regulated yield-focused structure. It is, of course, TFSA and RSP eligible. You can see over here on the right, guys, the ticker is ETH. The management fee is a little bit higher at 1.10%. Current NAV is $3.59, is very low. And this one is currency hedged. Now, they do have an ETH.B, which is not currency hedged. And they also offer an ETH.U, which is the US version. You can buy it in USD, and it's not currency hedged, of course. You can see here they just show you how Ethereum has gone up and down. I believe this is probably, this is just the past year. All right, let's jump quickly into portfolio breakdown. You can see it's 100% holding Ether, and it looks as though right now they are writing calls on 15% of the portfolio. Performance and distributions. Unfortunately, guys, this is where it kind of lacks. You can see here that had you put $10,000 into this fund back when it was first launched on December 2nd of 2021, you would currently have, where's that line? It looks like, hold on a sec, we can drag this across. You would currently have about $6,000. So not good returns at all. Unfortunately, they launched this at a time when I believe it was Bitcoin and Ether both tanked. So you can see right here how it kind of dropped right away, right? Within the first year, within the first 6 months. Okay, so they really launched it at a bad time. Now, had you taken advantage of this period and purchased ETH between, say, May of 2022 all the way up until today, you would have been able to actually had really decent returns. So unfortunately, in this case, timing the market does matter. So you can see down here, it shows since inception minus 11% on the one that I own, which is not good at all. Past year is 36% and 3 years is 22%. So like I said, it had a really rough start. In my Wealthsimple account, here's the 1 year chart. And I'll show you this right about April 6th or April 8th, it went down to $1.64. So had you decided to load up at that point in time, you would be up 100% at this moment. Now, myself, I ended up buying an extra 500 shares a few months ago when it was around $2.65. So I was able to bring my average price down to $3.29. Otherwise, I was in the red. So I did end up buying another 500 shares, which brought my cost down. So now I'm currently positive. As you can see, Ethereum did spike for a little while, and so did ETH. I think it got up to a high of about 275, but for some reason it's coming back down again. So maybe a good time to start buying again. I haven't been buying recently, but I probably should consider buying again. I currently have 1,600 shares of ETH. Now, for Americans who are watching this channel and you can't purchase ETH, there is YETH from Roundhill. So, and I'm actually thinking about adding this to my daily snowball portfolio because I currently have YBTC. I believe it pays on Thursdays. So I'm thinking about adding YETH as well. So this would be another option, and I'm sure there's more. If you feel like there's a better option, please put it in the comments below. All right, guys, we're getting close to the 5 minute mark. Like I said, I have 1,600 shares. I did have to average down. That's one strategy of being an investor, whether you're a growth investor or a covered call ETF, passive income investor. If you like a certain position, maybe you're investing in Apple stock or TD Bank, or you're investing in something like ETH. When the market dips, when it drops down like that, it is a good time to buy more if you believe in the underlying stock, right? And you believe in the investment that you hold, which you should if you're buying it, right? Otherwise, you need to get out. Um, as always, guys, this is not financial advice. I'm not a financial advisor. I'm sharing my journey with you guys of how I'm making. In October, I made a little over $12,000. I think November should be just over 11,000 because there isn't that fifth week. But again, yeah, it's not financial advice. Please do your own due diligence. I am on Blossom if you want to follow me on Blossom. I will leave a link in the description below and also in the first comment. All right, guys, so until tomorrow, bye for now.